I joined the business just coming up 4 years ago, and the challenges in the business when I joined were around cash flow, and that's not surprising for a CFO to come in and cash to be its biggest challenge. But I think not long after I joined, about 3 months, House of Fraser went into administration following an attempted CVA, and that was our second biggest customer and took us for around about £1 million. Our business at that time was predominantly concessions, so Debenhams the biggest, and then House of Fraser, and then Beales and Boundary Mills. We had a few of our own shops, but they were in outlet centres, a small online presence, and a little wholesale business. So we had all of the routes to market for men's formal wear. We've also got the Ben Sherman licence as well, so we've got those Ben Sherman stores on outlets. So with House of Fraser going to administration and having reviewed the historic financials for Debenhams, my view was that Debenhams would be something very close to House of Fraser. So we called in the guys from KPMG, and they helped us do a full review of our business, and also a review of Debenhams' business as well, and what the options were for Debenhams. And the output of that at that time, 3 years ago, was probably do a CVA. That may not be successful, and therefore we'll probably go into administration, and the administration could either be successful and come out, or not, and it could be into liquidation. So as a business, we set our 3-year plan, which was to reduce our reliance upon Debenhams. So we started to exit some of those concessions, and as our concession staff left who worked in Debenhams, we didn't replace them. We only bought stock with our own branded product on instead of Debenhams branded product. We renegotiated the whole concession agreement with the chief exec of Debenhams, significantly improved our payment terms, which helped for cash, and also reduced our exposure. So we worked hard on that for quite a long period of time, and then worked hard in the background in terms of replacing that revenue that we were taking out by coming out of Debenhams. So we really focused on e-commerce. We were probably 5 years behind the market in terms of investment. Everything was outsourced, third party, and so we brought in an e-com director, and over time we've built a full team. So e-com was a really big focus. We appointed Savills as our property agents, and started looking at full price stores for Suit Direct, and also Ben Sherman, and also started looking for another big brand that we could lend our expertise to, and we started talking to Ted Baker, and that would have been in 2019. And fast forward then all of the way through to COVID happening, which was very, very surreal at the time. I remember doing cash flow forecasts, and I think it was probably 13th of Friday the 13th in March, and I ran the scenarios, worst case being like Italy going into full lockdown, which was bizarre in itself, and that maybe lasting 6 weeks. And for a business like us that gets in £2 million of cash a week, the math's pretty simple, like 10, 12, 15 million pound of cash gone from the business. The profits, immaterial, it's all about cash. So that was the early signs, and I remember the chief executive going, Nick, don't worry, they'll never lock us down, it's not going to happen. And it did. But Rishi announced the JRS scheme, and introduced the word furlough to us all on the Friday night. The Saturday morning, the exec management team met up in Hartlepool, where our distribution centre is, and we just said, right, we're just going to lock everything down, and apart from the management team, everyone will be furloughed, and we'll just see what happens. I remember doing the first furlough claim, and it was something insane, like 70 columns long, because it was so complicated. But that claim in itself was well over £1 million. So that was an absolute lifesaver for the business early in COVID. And then Debenhams went into administration. And yeah, sometimes events like that are like bittersweet. You don't really want it to happen because it's so fundamentally to your business, but it's also a big weight lifted off your shoulders as well. Thankfully, because of all of the changes that we made in our business, when Debenhams went to administration, the financial loss was very, very small, nowhere near as big as when House of Fraser happened, although the business actually was more than 10 times the size of House of Fraser, so the financial loss wasn't big. The issue with Debenhams was what would happen post-COVID. Would they open the stores and continue trading? And we had about, in excess of 300 staff working in Debenhams concessions on our payroll, many of them being here a long time with a big redundancy cost. Add to that the racking up creditors and the stress from constantly being asked when you're going to pay your rents on stores that were shut, not able to trade, cancelling out of stock left, right and centre, and quite a few legacy issues in the business. So our balance sheet worth for the business was negative, so a liability at the bottom line and not an asset. So we called upon KPMG again to come into our business and help us assess what our options were. Not very many, and we decided to go with a CVA. We wanted to do what I would call a proper CVA. So historically, retail CVAs would just be close loss-making stores, restructure the rents, and then move on, and that would be the only change in the business. We did that, so we closed loss-making stores. We did renegotiate the rents in the CVA, but we also compromised all of the creditors, and we classed them critical, non-critical. So if you were non-critical, you got compromised 90%. If you were classed as critical, then you got compromised 40%. So all creditors got compromised. All of the staff that worked in Debenhams concessions, they also got made redundant in that process, and their payments fell into the lifeboat scheme. We also closed a huge warehouse in Goole, which, when I joined the business back in 2017, the business had £30 million of stock at cost, which was probably about a year's worth. And we'd got that stock down to around 18 million by the time COVID came, and therefore we didn't need the Hartlepool warehouse and the Goole warehouse. So in the CVA we compromised both of the warehouses, and both those warehouses were with one landlord. And all of this wasn't done from a distance. We spoke to virtually every creditor. We spoke to virtually every landlord. We spoke to the UK Landlord Federation. So we didn't shy away from anything. We had really difficult conversations with everybody, but explained why we were doing it and what the benefit was. And thankfully over 90% voted in favour of the CVA, and the CVA was successful. It went through, and it's completely changed the shape of our business. At the same time, in fact just before the CVA was announced, Ted Baker announced that we would have the formal wear licence. That we've been working hard with them. So this was to design, manufacture and distribute all Ted Baker's men's formal wear globally, with the exception of North America. So that in itself, combined with the growth in e-commerce, that pretty much covered the lost revenue on Debenhams. So it really changed the whole business model really, really quickly. And through that period of time, other retailers failed. So Oasis disappeared, Warehouse disappeared, Karen Millen, and so on and so on. And we identified all of these empty units in really, really prime locations where historically we'd never been able to afford the rents, just never been able to get it to stack up, because they also wanted a 10-year lease. So you didn't have that opportunity to really test to see if you could be successful or not. So we took on our first Suit Direct full price unit in Birmingham on New Street, right next to the Apple store, so perfect location, ex-Oasis store, beautiful flooring, excellent lights, the condition of the store was brilliant, so all we had to do really was decorate it, put a sign above the door, and put our stock in, of which we still had plenty in the warehouse, and it worked really, really well, and sales were great. Then we go into lockdown 2, then lockdown 3, but we kept looking for more and more stores, and over the last year we've been opening stores at a rate of 1 every other week. We opened the second in the Metro Centre in Newcastle, which is really, really close to where I live, you can tell by the accent. We renegotiated with the landlord at Hartlepool Warehouse and signed a new 10-year lease there, and he took the Google warehouse back. We also compromised our head office in Leeds, and yeah, we moved from that site where we'd been for longer than 25 years into this new facility at Thorpe Park, which is, yeah, it's cheaper, but also it's much more fit for purpose and suits our new business. And you know, post-COVID, post-Debenhams, post-CVA, it's lovely to have a fresh start in such lovely surroundings. So it's been busy. All of the stores thankfully have been successful, and right now I've got another 40 live conversations for units across England, Scotland, Wales. So it's going really, really well. Obviously we would never have been able to do any of this by ourselves, so we rely heavily on the professionals. So Savills have been amazing all the way through this, and we're supported from teams here in Leeds and also in London. Walker Morris have been amazing all the way through the COVID journey as well, so they help support us with the CVA, and then they also do all of our licensing work on the property side as well, so they're a really important part to us. And KPMG have been brilliant all the way through the last 4 years. So it's been an interesting time. I think that the future for this business is really, really bright, because we have Ted Baker. It's a real anchor brand in the new Suit Direct stores on the high street, and then you can mix in there all our other brands that we own. So Alexander of England has got a Royal Warrant, so we have that, and we can do that made to measure. We have Racing Green, which is a fantastic brand. Gibson London, Antique Rogue, which is a bit Peaky Blinder. So we've got suits for every guy, for every occasion, and occasions is what has kept our business going. So post lockdown 3, weddings has been insane. You know, it's not rocket science, it's just simple things. We never had an appointment booking system in stores before, so the e-com director knocked one up over a weekend, put it live on the internet, and you know, all of a sudden now we're getting like 150 bookings a week for wedding parties. You know, and you're not going to go through all of the time to book it and turn up and not actually buy. So the conversion on those is fantastic. You know, younger kids' proms have kicked back in again, so prom suits have been fantastic for us. The racing season's kicked back off, so people have wanted to go out peacocking, so there's been lots and lots of Mark Darcy suits sold, who, again, you know, we didn't start selling that brand until maybe 3 years ago, and zero in our business, and now we are their biggest customer. And we sell lots of the Mark Darcy suits, and they're a really important supply to us. And again, someone who's been really supportive all the way through a very challenging 20-month period. So I think, yeah, over the past 3 years, we have definitely changed the shape of the business. The business model is completely different, and the one key difference for me in this business now is that when I joined, we had a small influence on the biggest part of our business, which was Debenhams, House of Fraser, Beales, which all at one point went into administration. We could only influence their results. Whereas now, having all of these stores, our own stores, we don't influence them, we've got absolute control of them. So we can turn on a dime, you know, we can spin really quickly and make changes in the store really quickly, and everything's in our control. That's the one big thing for me. What will it look like in 3 years' time? I think that there's 3 things that we're going to be doing. Continuing to open more stores. So I'd like to have, you know, at least 100 Suit Direct high street stores out there in 3 years' time. We will continue to drive the e-commerce site. Those 2 things alone hopefully will make us the biggest formal wear men's business in the UK. hands down. And then the third leg on the stool is our off-price products as well that we do for the likes of TK Maxx on a global level. And that was the biggest formal wear men's business in the UK.